Good morning, students. Hello, everyone. See, today's subject account, chapter number 1. Today's lecture is subject account, chapter number 1, accounting and its terminology. And this is my lecture number 3. Okay. So, first of all, I want to tell you about that. I hope you all understand this terminology, this definition, these accounts, and all these things. If you have any doubts regarding this, then there are two options. First of all, you can repeat this video, repeat and see again, and you can understand this terminology and the subject account, or otherwise you can WhatsApp me at any time. Okay, I will answer you. Now, see, in the last lecture we complete up to point number 7, that is current liability and the non-current liability. See, what is liability? First of all, liability means whatever you have to pay to anyone, that is your liability. There are two types of liability. In basis of relation, there are two types. First one is internal liability and the second one is external liability. On the basis of time, again there are two types. First one is current liability and the second one is non-current liability. Now we move forward to our next point, that is point number 8 on page number 13. See, there are some my homeworks. See, you have to write all the terminology and definition of accounts in your example book, and you have to read these again and again. Okay, so the homework is you have to read 1 to 7 all the terminology, first accounting definition, and then 8 to 24, that is page number 13, 14 and 15, all the terminologies, right? And here I am explaining you the next one, that is assets, 8th one. There are, first of all I am reading that there are two important aspects in business, liability and assets. See, into each and every business you have two aspects. What means of that? You have to pay someone, that is your liability, and whatever is helping to the business is your assets. See, whatever you have to pay to someone, that is liability, and whatever helping to you, to your business, that is your assets in simple word. See here, we have and obtain the information about the liability. Now let us have information about assets. Under double entry system, at one side liability take place and the simultaneously on the other side assets emerges at the time of commencement of the business. Whenever you are starting the business, that is your, whenever you are starting your business with the capital. See, what is the definition of capital? Whatever cash or assets or kind brings by the owner to the business, that is your capital, right? So you are starting or you are commencing your business with cash. First of all, you purchase a shop, right? That is your asset. See, whenever you are starting your business, you are first of all you are purchasing the shop, that is say 10 lakh rupees shop you are purchasing, right? So first of all, this is your assets. Now you you purchase a 1 or 2 lakh rupees goods to sell that goods, that is here, that is the also your assets, because you are investing that into your business, right? Now you are purchasing some furniture for your shop, that is also your assets. Okay, so these are the examples of your assets whenever you are starting the business. That is, whenever you are starting your business, you have to you have some things that is used to your business, and that is called assets. Okay, so first of all, assets means any such tangible or intangible product or item which is of ownership of business and has economic value. This is the main or simple definition of assets. Assets means any such tangible or intangible. What means of tangible and intangible? Whatever you can see, that is the tangible, and whatever you cannot see, that is intangible. See, this one is tangible assets for me. It is tangible assets for me because it is seen, right? And the goodwill and your prestige, that is also your assets for the business, and that is also an intangible assets, okay, which we cannot see by our eyes, that is an intangible assets, and whichever we can see with our eyes, that is a tangible assets. Assets means any such tangible or intangible product or item which is of ownership of the business. See, assets has compulsory ownership of business. See, if I take a furniture for a rent for 2 or 5 days, right, that is not my assets. If I am doing my business into a shop which is not mine, and I am just giving a rent, I am just paying a rent for that, that is also not my assets. First, the word is ownership of the business. The item is with the ownership of the business, it is called assets. Or you can say whatever used to do your business, that is your assets, okay, for the long term. See, which is and has economic value, and it has also an economic value, that means you can measure in money, okay. See, in other words, assets means economic resource which are held by owner and from which there is expectation of economic benefit to the business in the future. See, whatever I told you here is that, in other words, assets means economic resources. Which resources? Economic resources. That means you have to you can measure that resources into money. That's why it is called an economic resources which are held by owner. That is, the ownership of that particular thing or particular product is for the is of the owner, and from which there is an expectation of economic benefit. See, why I am purchasing a shop? Why I am because I have some economic benefit into a future, because if I am purchasing a shop and it will use to do my business, right? If I don't have any shop, then how can I do my business? See, I have one place for the business, that is my assets, right? And it has a future benefit. My fixed business is here, you can purchase or sell from me here, so that is my permanent address, and that's why it is a beneficiary to me for my business also, okay. So the word is which there is an expectation of economic benefit into the future business in the future, okay. Classification of the assets is as follows. First of all, there are 3 types of assets. See here, assets. What is assets? In normal words, whatever is useful into the future for the business, that is an assets in normal and simple words, okay. Now see here, there are 3 types of assets. First one is non-current assets. Second one is current assets. And the third one is fictitious asset. See, current and non-current are the familiar word for you, because here also a current liability and a non-current liability. That is our last point, is non-current and current liability. What means of that? In relation to time, if the current liability and non-current liability means what? You have to pay within a year, that is your current liability. You have to pay after 1 year or after more than 1 year, then it is your non-current liability. Again here the same definition is there. If the assets is useful only to the within a year, that is your current assets. The assets is useful to your business only within a year, or you can say only for a year or less than that particular period, that is less than 1 year, then it is your current assets. Otherwise the assets will use to your business more than 1 year, that is, see, if I am purchasing AC for my business and it is useful to more than 1 year, that is 3 to 4 or 5 years, right? So it is our non-current assets. I am purchasing a shop into the commencement of my business, then it is also an non-current assets. And the second name of that is fixed assets. It is fixed. More than 1 year, it is fixed. That's why it is called fixed asset, or you can say it is a non-current assets. Okay, so turn the next page and see the detail of non-current assets. That is our point number 9. Non-current assets are identified on the basis of time. Like non-current liability, non-current assets are also for the period of more than 1 year, right? They are known as long-term assets or fixed assets. Non-current assets also known as fixed assets as, or it is a long-term assets. So there are 3 names of assets. Non-current assets, first of all, fixed assets or long-term assets. What is the definition of these? See, if they ask non-current assets, if they ask fixed asset, or if they ask long-term assets, all the name are synonyms. That's why it is you have to give one answer, that is the assets which are used for more than 1 year, that is your non-current or fixed or long-term assets. Okay. Now land and building, it is the example is given here. Land and building, plant, machineries, furniture, trademark, copyright, patent, goodwill, franchises, etc. See, you all know about land and building, you all know about plant, machineries, whichever used in the production or in the factory, right? Next, furniture, you all know that, but the name, trademark, copyright, patent, goodwill, franchises, that are all are intangible assets. See, land and building, furniture, plant, machineries, you can see. That's why it is, you can say it is a tangible assets. Whatever assets you can see by your normal eyes, that is your tangible assets. This one is the example of tangible assets, that is land and building, plant, machineries, furniture, right? Or the trademark, copyright. See, if you if you see the films, there are first paragraph is there, copyright of this film is so and so, so and so. What is that? That is the assets for that particular producer, for that particular director, right? Copyright of that particular picture is of him, and that's why we cannot repeat, or we cannot you can say इसको हम रिपीट, उसको कैसे के बोलते हैं, क्या रिपीट नहीं कर सकते, नहीं कॉपी नहीं कर सकती उसकी, राइट? वी कैन नॉट कॉपी दैट. ओके, सो हियर copyright of that particular picture is there, and that is their assets, and we cannot see in our normal eyes. That's why that is an intangible assets. Okay, so again, goodwill. What is goodwill? Goodwill means the credit into your market. See, you have a business and you have own their own markets, right? And in the market, if you have some persons, some customers, some suppliers, all the persons whichever know to you, and on the basis of your credit, some goods or some cash you can borrow, you can give in on the credit of your business or credit of your name, and that is called a goodwill. See, that we will discuss in our regular lecture. There are in 12th standard also one chapter about goodwill is there. So we will discuss that all these things in our regular lecture. So we don't worry about that. Okay. Now move again. Move forward. Franchises etc. are the included in the non-current assets. These assets have life of more than 1 year. Okay. So non-current assets can be categorized into further two categories, that is tangible and intangible assets. Now see the tangible assets, that is our 10th point. Tangible assets are those assets which are having physical existence. We can see, that means the assets which have physical existence, that is called a tangible assets. Tangible assets can be seen and can be touched. Okay. Tangible assets are subcategory of non-current assets. See, in the non-current assets there are two assets. First one is tangible, second one is intangible. So here we can write tangible assets and intangible assets. Okay, so it is the subcategory of non-current assets. Intangible assets, land, building, plant, machinery, furniture, etc. are included. I already told you in non-current assets point. Now the 11th point is intangible assets. Intangible word itself classifies that the meaning of these assets. Intangible assets do not hold physical existence. That means you cannot see by normal eyes. You cannot touch that particular assets. Okay, so there is no any physical existence. See, goodwill, that is your credit. That is the credit you can see, you can feel that, right? The credit in the market, you can feel the credit. You cannot touch, you cannot see the credit, right? See, water you can see, but air you cannot see, but it has physical existence. Yes, physical existence is not there, but you can see, you cannot see that air. That means it is an intangible asset. Okay, so this cannot be seen and this cannot be touched. Intangible assets are also subcategory of non-current assets. Trademark, copyright, patent, goodwill, etc. all are included in intangible assets. See, you just know about that. There is no any further information you have to write here. You have to write just the definition into your own words. You have to write just meaning, not definition. See, you have to just write meaning into your own words whenever the terminology is asked, and you have to give one or two examples regarding that particular terminology. Okay, so don't be worry about that. We will discuss this one. If you don't understand this, we will discuss in our regular lecture again. Okay, so don't be worry about that. Now the next one is current assets, 12th one. After non-current assets, our second is current assets. These assets are of that kind whose time duration is of less than 1 year. As again, the current liability is less than 1 year, then here the current assets is also less than 1 year. These assets can be converted into cash immediately. See, I will give you the example. First of all, cash is your current assets. Then bank balance is your current assets. You can ask any time to the bank that give me my own money. There is some procedure and you have to fill the slip of that, and that all these things are, there's procedure of that, but you can convert easily or immediately into the cash. That is called a current asset. See, your closing stock. What is your stock? Whatever you are purchasing for your business and whatever for the resale of that particular goods, and goods which are in your shop, that is your stock. and whenever you are selling that stock, that is your current assets. So it is immediately converted into cash, that is called a current assets. Okay. For day-to-day transactions of business, these assets are used. In current assets, cash balance, bank balance, debtors, bills receivable, raw material, stock, finished goods stock, etc. are included. Whatever you can convert it into 1 or 5 days or 10 days or 1 month, that is less than 1 year, you can convert into a cash, that is called a current assets. Okay, into simple word. Now, a product for which trading is done by the business is known as goods of the business. See, whatever product purchase or whatever product sale by the business, it is called goods for the business, and it is also called a stock. Whatever goods are into your shop right now, that is your current assets. See here, for the example, grains is the goods for the business made of grains. See, if I am the seller of furniture and I have 5 chairs, then it is my goods for me, and it is, you can say, it is my stock, it is my current asset. If I am the seller of ready-made garment, okay, and I have 5 pairs of children wear, then it is my assets, it is my stock. Whenever I sold it, I am converting it into a cash. That's why we can say it is my current assets. Okay. Whatever, see, if I am a ready-made garment person and seller, and if I have a furniture, see, keep in mind, if I am a ready-made garment seller or shopkeeper and I have a 2 or 3 chairs, so that is not my goods, that is my assets, but that is not my goods. So the difference between goods and the stock and the assets is here. Whatever you are purchasing or selling, that is your goods, and whatever is useful to the business, that is your assets. Okay. See here, what is the next? 13 is the liquid assets. See, here there is no any sub part. Non-current assets, fixed asset, long-term assets. There are 3 types of assets. Current assets, of that there are a sub part of current assets. You can say liquid assets. See, what is the definition of current assets? Within a year, you are converting all the assets into cash, that is called a current assets. But see the definition of liquid assets. Liquid assets are recognized as subcategory of current assets. See here, subcategory of long-term assets, it's tangible and intangible assets, right? And now the subcategory of current assets, only one, it is a liquid assets. See, all current assets excluding stock are recognized as liquid assets. See, what is the example of current assets? Debtors, stock, cash balance, bank balance, bills receivable, all are the examples of current assets. But एक्सक्लूडिंग स्टॉक को हम साइड में रख देते हैं, तो बाकी का जो बचा है वो क्या हुआ हमारा? लिक्विड असेट्स, राइट? सो हियर all the current assets excluding stock are recognized as liquid asset. These assets excluding stock can be converted into cash quickly. See, what is stock? Whatever I am selling, and after that whatever is remaining into my business, that is my stock, first of all. Okay, so if I want to sell that particular stock and I convert that into a cash immediately, but there is no any customer who are purchasing my goods, then I cannot convert into cash immediately. But the bank balance, but the cash balance, all the debtors, all are the assets which I can convert into cash immediately. See, that is on my part. I can convert that immediately into cash because I have some authority, I have some planning. But I cannot sell that particular stock without the purchasing power, because without any customer, right? If there is no customer, then I cannot sell my goods, I cannot sell my stock. Okay. So here, excluding stock, all the assets are called liquid assets. See, what is the definition of first current assets? Definition of current assets: all the assets which are converted within a year into a cash, that is a current assets. But immediately, the liquid assets means what? Whatever assets you can convert into cash immediately, that is within a 1 to 5 or 10 days, that means that is a liquid assets. So excluding stock, all the assets are liquid assets. Okay. So the example is here: debtors, bills receivable, etc. Here you can write cash balance, also bank balance also, that is as your liquid assets, can be quickly converted into cash. Okay. Now the two parts of assets again, that is real asset as well as fictitious assets. See, what means of real assets now? Here you can say that there is only two parts on the basis of time, non-current and current assets. Now again, assets has two parts. Liability has two parts on the basis of relation, that is internal liability as well as external liability. On the basis of time, current liability and non-current liability. Again here, assets on the basis of time, current assets, non-current assets, right? Sub part of that is tangible, intangible. Sub part of this is liquid assets. Now here the two types of assets, that is real and fictitious assets. First of all, real assets. Real assets means assets that have value in reality. That is the word real assets. What is the definition of real assets? The assets which have value in reality, that is your real assets. Okay. And what is fictitious assets? See, real assets is and fictitious assets is understood by definition of both, right? It at the same time. What is the fictitious asset? First of all, fictitious assets do not have physical form or existence. See, like that, tangible and intangible assets. Tangible assets has physical existence, intangible assets has not any physical existence. Like that, real assets has the value, or you can say economical value, or assets that have value in the reality, that is called real assets. Asset that has not a value in a reality, or you can say not a physical existence, that is called a fictitious assets. Okay, now first of all, again read real assets. These assets have market price. Okay, physical value, that's why that have market price. This means it has realizable value. These assets can be converted into cash, and in these assets, tangible, intangible, current assets are included. All these assets are included in real assets. See here, assets has two parts: non-current, current. Non-current has two parts: tangible, intangible. Current has also one sub part, that is liquid assets. But all these assets are included in real assets because there is an existence of value. See here, tangible assets has also value, but intangible assets has also their value. Goodwill, copyright, you can purchase, you can sell. That's why it is also your assets. whatever you can see or whatever the assets which has a value in reality, you can economical value, that means you can purchase or sell by giving money or you can measure in money, that is called a real assets. So these all are the sub parts of real assets. Okay, now read. If the money can be realized from the sale of such assets, if money can be realized, then they are known as real assets. If you are selling any furniture, if you are selling any goods, if you are selling your shop, whatever you are selling and you realize a money, then it is called a real assets. Okay, so whatever assets you are selling and you got the money, then it is called a real assets. The value in the reality, that is called real asset. Okay, though the sale of real assets can cash can be procured. That means whenever you are selling the assets, the cash can be cash is in the reward of the cash. You can sell the assets and you got the money, you got the cash. Okay, now the fictitious asset. What means of fictitious asset? Fictitious assets do not have physical form or existence. Realizable value of fictitious assets is zero. See, these all assets are subparts of real assets. Now fictitious assets means what? Whenever you are selling that assets, you first of all you cannot purchase or sell fictitious assets because there is no any physical form or physical existence. So you cannot purchase or sell. You have to just write that fictitious asset. Okay, so these assets can be converted into cash, cannot be converted into cash. This is a non-recurring expenses. What is non-recurring expenses? First of all, you have to know about that, and then you can know the fictitious assets. See, I will give you one example that in the advertisement of Thumbs Up, okay, Salman Khan is there, and Salman Khan charge for that particular advertisement 1 crore rupees. Okay, so whenever Coca-Cola company or Thumbs Up company, Coca-Cola company give 1 crore to Salman Khan, 1 or 2 crore to the all other teams, that means expenses of advertisement is more than 2 to 3 crores. What the expense from that particular expense is, the Coca-Cola company can sell their Thumbs Up bottle. How many Thumbs Up bottle you can say? More it is 1 crore bottle they sell, right? So the income of the particular Thumbs Up bottle is less than the expenses. Okay, so the advertisement expense is very big, it is very high. See, I am giving you here one example for that. Total expenses for the advertisement is say 3 crore. Okay, and the benefit of that particular advertisement, that is the 3 crore expenses is there, then the benefit is taken for the 3 years. So the benefit of that particular advertisement will take on for the 3 years, and the total expenses is 3 crore. So now you can say that 3 crore divided by 3 years. So the particular current year expense is 1 crore rupees. See, total 3 crore expense, and these 3 crore expense will distributed within within a 3 year. Right? So the current year expense is 1 crore rupees. So the remaining 2 crores total expense I am paying right now 3 crores, but we can write only 1 crore is our current expense because the benefit of that particular ad will be used for the 3 years. So current year expense is 1 crore and the remaining 2 crore is your fictitious assets. Remaining 2 crores. See, whatever I am paying, that is 3 crore. What is the benefit taken from the expenses? That is 1 crore. Okay, so the remaining expense is your fictitious assets. That means you have to take 2 crores from the next year, or the expenses of 2 crore will be used in the next years. That's why it is our assets. Whatever is useful in the business, that is called assets. What is the definition of asset? First of all, whatever product or item used into our business for the future, that is our assets. See, these 2 crore, first of all, this 3 crore is our assets, and from this 3 crore, right now in the current year I am using only 1 crore. So the remaining 2 crore will be used into future, right? That advertisement will use into future for the next 2 years. That's why from that we can sell our product also. That's why it is a fictitious asset. See, now I'm reading that this is non-recurring expenses. The benefit of these expenses available for the period of more than 1 year. See here, benefit of these expenses will available for more than 1 year. This amount is to be written off in a certain years. See, in the current year only 1 crore is written off. Remaining 2 crores will be your fictitious assets. Whenever, see, in the next year we again use 1 crore. So from 2 crore we again use 1 crore, and 1 crore is my fictitious assets in the next year. Okay. So here every year predetermined amount is written off and shown as an expenses. This one is predetermined amount. 3 crore total expense, 3 year of benefit, and that's why 1 crore is current year or all years expenses. So from 3 crore, 1 crore current year expense will deduct, and 2 crore is your fictitious assets. Into the next year 2 crore is there, 1 crore is that particular year expense. That's why again 1 crore is your fictitious assets. Okay. So every year predetermined amount is written off and shown as an expense. Issue cost of the share and debenture, preliminary expenses, share or debenture, discount, etc. are the illustration of fictitious assets. See, advertisement compensation expenses. I am giving example of advertisement campaigning expenses, and this is also your fictitious assets, right? This is also an example of fictitious asset. Fictitious assets are also known as spread revenue expense or deferred revenue expense. The next or main word, if they ask find out what is fictitious assets, you have to write this, or if they ask write down about the deferred revenue expenditure, you also have to write these again. Okay, so here all the topics of assets particular is over. First of all, write down these and read again and again. And I told you that if you don't understand these, then see again and again this video and you will be understood. Or if then any problem, then you can ask me on my WhatsApp number. Okay, first of all, write down this. Okay, now the next point is receipts. What is receipt? Whatever you received, that is your receipt. Whatever cash you received, that is called a receipt. See, when money is received due to consequence of business transactions, it is known as receipt. If you are paying fees, then school give you a receipt, and the receipt is here it is said that receipt. Whenever any amount, whenever if I am selling this particular pen, then I got the money, and that is called a receipt for me. So when money is received due to consequence of business transaction, see the word business transaction, it is known as receipt. These receipts are classified on the basis of their nature. Receipts regularly received during the year and not regularly received during the year. Whatever received regularly received during the year, that is one part of that receipt, and whatever the receipt are not regularly received during the year, that is the second part. Business received regular receipt from day-to-day activities. Example, receipt of the sale in the business, receipt of commission, receipt of dividend. These receipts are received on regular basis. See, regular day-to-day I have to sell my goods and I got the receipt. That's why it is a regular day-to-day receipt. See, into the bank, whenever I am if I am doing the business of commission, I am doing a business of commission, then receipt of commission is also my day-to-day receipt. Okay, so whatever receipt is received by me day-to-day or in regular ways, that is called a regular receipt. These receipts are categorized into two categories. First is regular receipt, which are known as revenue receipt, and the capital receipt, which are not regular in nature. Okay, so here there are two parts of receipts. Regular, that is revenue receipt, and after 1 year, or it is not regular, that is capital receipt. Right? First of all, we know that point number 17 about capital receipt. This receipt is not received regularly. These receipts is procedure from the sale of assets. See, I have furniture and I want to sell that. I am not regularly sell my furniture because my main business is ready-made garment. But I have some furniture and I want to adjust, or I want to purchase new one. So first of all, I have to sell that particular old furniture into the business from the business, right? And I got the money. That is my capital receipt, because I am not regularly sell that particular old furniture. I am just one sell that. After that, I am purchasing new one for the period of more than 2 to 3 years. Then afterwards it will become old, and again I sold that old furniture. So the receipt which are not regularly received is called a capital receipt. See, the example of that is asset is not, see, these receipt is procedure from the sale of the asset. This receipt is obtained by the issuing debentures. Assets is not sold frequently. Debentures are not issued frequently. These kind of receipts are not received frequently. Such kind of receipts are known as capital receipt. Or on the basis of current assets, current liability, you can say here that the receipt which is received within a year more than once, that is called a revenue receipt. Or the receipt that will be received after 1 year, that is after 1 year, that means more than 2 to 3 years once, then it is called a capital receipt. Or you can say the receipt which is not regularly received, that is capital receipt. Okay, now the next one is revenue receipt, and it is our today's last point. The flow of these receipts would remain constant. What means of that? See, if I am selling the goods, today I am selling one goods, then second, then third, next day I'm selling the next 1, 2, 3, 4 goods. So whatever amount received by me, that is a revenue received. Okay, from these received, profit earned during the year, see, or loss incurred can be ascertained. See, if I am purchasing my ready-made children wear, one pair is for 1000 rupees and I am selling that into 1500, I got the 500 rupees as a profit. Or if I am purchasing that particular pair in 1000 and I sell that in 900, I got 100 rupees loss. So whatever received by me, that is 900 or 1500, that is my revenue received, and from that revenue received I have a profit or I have a loss. Okay, in this category of the received, income of sale or income of commission, income of discount, income of rent, etc. are included. That means you can say day-to-day activity, day-to-day payments and day-to-day receipts are here included, right? These kind of receipts are frequently revenue receipt is also as revenue income. These kind of receipts are frequently because in day-to-day it is used, or you can say in one day there are received more than one time. Okay, so you can say it is frequently received. And revenue received is also known as revenue income. So the question regarding revenue receipt or the question regarding revenue income, your answer is same. The receipt which are received regularly or frequently, then that is called, it is known as revenue receipt or revenue income. Okay, so here now I am concluding my lecture because there is more than you can say from, we are starting from 8 and we are completing here to 18 points. So it is more than 10 points is completed in our this lecture. If you don't understand, then repeatedly see the videos. Okay, and the time for homework. See, homework you have to write in your example book 1 to 7 you already written, that now you have to write from 8 to 18. Then reading homework. See, you already read up to 24 points. Now you have to read up to 33 points. That is on page number 15. Remaining, see, remaining after 18 you have to again read, that is from 19 to 33. This is your today's homework. You have to read point number 19 to 33. Okay, sorry, 36. 19 to 36 you have to read. Okay, this is your homework. Please do your homework. Okay, thank you class.